How have the bond markets responded to the latest decision by the CBN to hike interest rates? It doesn't seem to have any bearing on equities. Has it impacted fixed income?
Not significantly. Immediately after the announcement in yesterday's trading, there was some bit of reaction, as yields went up, but it was very short-lived. And we find now that yields tend to have gone back to the levels where they were before. There was about a 40 basis point increase, which seems to have reversed itself. And what we've been finding is that the yields, fixed income yields, tend to respond more to the liquidity in the system than they do to the MPC actions. So broadly, there's a correlation, but they tend to be more liquidity based than MPC based.
What sort of variations are we seeing, Kubi, between short-term papers and medium-term papers? Because we're told that they do respond quite differently to the MPR, and even more so now that we've got liquidity issues going forward, and I'll explain in a second.
Well, we see there's a lot more activity at the short end. We think that that is driven primarily by the PFAs. They have a lot of interest in the fixed income market. You just said now that the equities, another trading day, that they've gone down another trading day. And that's a trend we've been seeing for some weeks now. Occasionally it spikes up, but usually it tends to go down. So there's a lot of interest at the short end for the PFAs, and then some interest again from the foreign investors. So you'll see much more activity there. You'll see more pressure on the yields at the shorter end than at the medium end of the market.
For how much longer is that going to continue, that sort of demand on the shorter end of the market? Because we're told that by October the government is hoping to discontinue 3-year papers. What's the strategy they're pursuing, and how's that going to impact liquidity in the system?
Well, the bonds trade. So even if we are seeing longer tenors, ideally, if that's what's available, we will have no choice but to trade them more actively, because that's where the market will be deeper. They should still trade. We should still be able to make prices off them. So even if there's more activity there, we can still enter and exit positions quite freely. But the PFAs don't trade. I mean, they are holding, so they prefer to see tenors that aren't too long. I think that's what we're seeing in the market. But the banks will still be taking up longer tenored papers, and we should be trading them to a quote.
All right, in terms of yields going forward, after this decision by the MPC, Kubi, the CBN's raised concerns obviously about liquidity issues going forward. That's with increased government spending, and that's despite the new minister saying that they are really doing everything in their power to reduce fiscal expenditure. CBN's not absolutely convinced by that.
Well, what we're seeing again is, yes, CBN has taken a lot of actions this year. In fact, this is the 5th consecutive rise. We're looking at 300 basis points from January to date. And it's in expectation that, we see an inflationary cycle coming. There have been wage increases, minimum wage increase, there's food inflation, and it's in light of that they've had to rein in liquidity. It does have an effect on yields. There will be some pressure on deposit rates to go up. Interbank rates will obviously react to it because the minimum benchmark has been raised. So we expect to see rates going up in the economy. And now that we can take a look back over the first 9 months of the year, you'll find out that if not for the actions that have been taken, there would have been a lot more liquidity in the system than there is now.
What's the broader impact on the Nigerian economy? I know that obviously inflation is looking a little bit better at the moment, but we are told the risks do persist. We know that credit lines, obviously because of issues in the bank, have been very, very modest in the recent past. Yeah. But once we start seeing a more liberal economy in this sense, but interest rates being really high, it's a huge constraint for business and for consumers. Is there a case for further tightening?
Well, I think it's more of margin compression that we've been seeing, because like you said, credit expansion hasn't been too good. So you find out that we're lending to the same set of companies, the blue chip names, the higher end of the market. To some extent, parts of the commercial sector have been squeezed out credit-wise. So what happens is that you have more of a margin compression than a hike in interest rates. Interest rates have been moderated by the sheer fact that we're not growing credit as robustly as we used to. Yes, there have been some complaints from the manufacturing sector, but you'll find most interest rates, the greater amount of credit is priced at in the lower double digits.
Another concern for the CBN is naira stability, and experts are saying by taking a more hawkish stance on monetary policy and interest rates, it's good for the naira. They're going to help support the currency and also the bond market. But we're not seeing that translated. The naira is under quite a bit of pressure.
Yes, it actually is under some pressure, but the question is, would it have been worse? We've been seeing, what I think we're seeing now is a controlled devaluation. We're not seeing any panic. We're not seeing panic in the market, but we're seeing the naira slip week on week. If you look for exactly the past 1 month, there's been devaluation at every single successive auction, but it hasn't been massive. We haven't seen a 2 or a 3 naira. We've seen about 3 naira over the space of 5 weeks or so, a 5-week period. So yes, the naira has been under pressure, but it would have been worse if not for the actions that the CBN has taken.